All right, let's dive right into this explainer where we are going to break down the absolute best options buying strategies out there, scaling all the way from beginner basics to professional grade. Look, if you've ever stared at the options market and felt totally overwhelmed by the sheer number of approaches, indicators, and opinions floating around, you are in exactly the right place. Today, we're taking a structured, evidence-based look at what actually works, drawing directly from a comprehensive playbook of options buying strategies.
Now, to keep things from getting overwhelming with all the market jargon, we're going to follow a clear step-by-step roadmap today. We'll start with the perfect strategy myth, hit the top intraday setups, move into swing and event strategies, touch on institutional tactics, and finally, wrap it up with the professional strategy stack.
Starting with Section 1, the perfect strategy myth. We really need to bust a massive trading myth right out of the gate, one that honestly costs beginners a ton of money. Listen to this quote, and let this reality check really sink in. There is no trading strategy that is consistently the most profitable. I know, right? It sounds harsh, but the source material makes it super clear that the highest returns always come with the highest risk. There is no magic formula, no secret indicator that just prints money all the time. What does exist, though, are strategies that have historically been profitable when used in the right market conditions, combined with the only real holy grail in trading: strict, disciplined risk management.
And this breakdown perfectly illustrates why context is literally everything. Look at how different setups require totally different market views and risk appetites. If you're a beginner, buying at-the-money calls requires a strong bullish view and carries medium risk. But if you jump to momentum scalping or trading news events, boom, you are suddenly in high or even very high-risk territory as an advanced trader. You simply can't take a beginner's understanding of risk and apply it to a high-momentum strategy. You've got to match the tool to your actual skill level.
Okay, moving on up to Level 1, Top Intraday Trading Setups. Let's look at the daily grind of the highest probability intraday strategies.
First up, we have the Opening Range Breakout, or ORB. This is a super practical setup for indices like Nifty and Bank Nifty. The logic here is actually brilliant in its simplicity. Step 1, you wait out the first 15 to 30 minutes. Why? Because the opening bell is just pure, unadulterated chaos, right? Let it settle. Step 2, watch for the price to break that opening range backed by strong volume. Then, Step 3, you execute. Buy a call on an upward break or a put on a downward break. When properly filtered, this bad boy boasts a historical win rate of roughly 55 to 70%.
Next up is the VWAP pullback. The absolute beauty of this one is that it explicitly forces you to wait for a retracement. It literally stops you from blindly chasing green candles and blowing up your account because of FOMO. You just identify the trend, wait patiently for the price to pull back to the VWAP, and enter only when the price resumes its trend direction. It completely removes that frantic, emotional chasing from your trading day.
Now, if you prefer strict, no-nonsense indicator logic, the Super Trend Plus EMA setup is definitely for you. It gives you extremely rigid if-then rules to keep you on the right side of the trend. You only buy calls when the price is above both the 20 and 50 EMAs and the super trend is green. On the flip side, you buy puts when the price is below both EMAs and the super trend is red. That's it. No guessing. The conditions are either met or they aren't.
But intraday trading isn't everything, right? Let's zoom out to Level 2, swing and event strategies. These are your more patient plays. For multi-day holds, where you're riding a trend over several days or even weeks, the source highlights classic price action patterns. We're talking bull flag breakouts for calls, bear flag breakdowns for puts, triangle breakouts, and rectangle breakouts. But actually, pay special attention to the cup and handle. The source specifically flags this as one of the highest quality bullish continuation setups out there. It takes a lot of patience to form, but man, the resulting breakout is usually incredibly powerful.
Then we've got the major event-based triggers. These are your massive, high-volatility days, RBI policy days, the union budget, election results, major company earnings, and U.S. Fed announcements. When these hit, the market doesn't just move, it explodes. Advanced traders jump on these using long straddles or long strangles to profit from massive swings, regardless of the actual direction. You don't have to guess if we're going up or down, you just need a huge move.
All right, time for Level 3, Institutional and Advanced Tactics. This is where we step into the big leagues. At this level, the complexity totally spikes. Professionals aren't just staring at basic moving averages anymore. They are hunting for major market inefficiencies. They're looking at things like liquidity sweeps plus reversals to see where retail stop losses are being hunted. They track fair value gaps, or FVGs, breaks of structure, and changes of character.
They're even tracking gamma squeeze strategies and max pain reversals to find an edge that the average retail trader completely misses. It is a totally different way of reading price action.
And that brings us to the boss level, the professional strategy stack. Let's see how consistently profitable traders actually synthesize all this theory into a daily routine.
So here is the real secret. Pros do not rely on just one signal. They don't just see a green arrow and buy. They stack their confirmations. They analyze market structure, they check the VWAP and 20 EMA, they look for volume spikes and open interest, and they tie it all together with raw price action and support/resistance. Plus, they use the average true range for stop-loss sizing. Backed by incredibly strict risk management, we're talking risking only 1 to 2% of their capital per trade. That is the bedrock of their survival.
Now, out of all the setups, indicators, and patterns we just covered, and yeah, there were a lot of them, the source actually boils this entire universe down to just 5. The top 5 most practical options buying strategies specifically for Indian indices. And here is that top 5 list: the opening range breakout, the VWAP pullback, the central pivot range or CPR breakout, price action combined with a volume breakout, and finally, smart money concepts, specifically moving from a liquidity sweep to a break of structure into a fair value gap. These 5 are crowned the ultimate winners because they perfectly align with how price, liquidity, and momentum actually behave in the real world. Plus, they can be objectively tested, so you aren't just relying on your gut feeling.
Knowing those top 5 is an amazing starting point, for sure. And the source material even teases a massive playbook of over 50 institutional setups. But honestly, the real question I want to leave you with isn't just which strategy to pick. It's whether you have the psychological discipline to respect the risk, stick to your rules, and actually execute them when the pressure is on. Definitely something to think about the next time you open your charts.